Hey everyone, welcome to my YouTube channel which is explore yourselves, banking and general knowledge etc. Today I will discuss about top 12 key income tax changes coming into effect from 1st April 2026. Today I will be discussing the top 12 key income tax changes coming into effect from 1st April 2026 as proposed in budget 2026. These changes mark a significant shift in India's taxation framework with the introductions of the new Income Tax Act 2025 and updated income tax rules 2026. The objective of these reforms is to simplify tax laws, enhance transparency, improve compliance, and make the system more taxpayer friendly. The changes cover various aspects such as tax slabs, deductions, billing procedures, TDS TCS provisions, and capital gains taxation. In these presentations, I will walk you through the most important updates that will impact individuals, businesses, and investors in the upcoming financial year 2026-2027. From 1st April 2026, multiple changes in income tax rules will be implemented for financial year 2026-2027, assessment year 2027-28, as proposed in budget 2026. These updates cover the Income Tax Act 2025, simplified compliance procedures, and revised due dates for filing returns. Below are 12 important income tax changes that taxpayers should be aware of. New Income Tax Rules 2026. The CBDT has introduced the Income Tax Rules 2026 effective from 1st April 2026. These new rules bring higher deduction limits along with a more stringent compliance and reporting system. New Income Tax Act 2025. Introduced in the previous budget, the Income Tax Act 2025 will come into force from 1st April 2026 and will apply from financial year 2026-2027 onwards. It will fully replace the existing Income Tax Act 1961, featuring simplified language and eliminating outdated provisions. The objective is to make the tax system more straightforward, improve ease of compliance, and minimize legal disputes. New Income Tax Rules 2026. The new Income Tax Rules 2026 will come into effect from 1st April 2026, replacing the decades-old income tax rules issued by the Central Board of Direct Taxes. These rules align with the Income Tax Act and introduce updated deduction limits, revised PAN requirements, and new reporting forms. Some of the key changes under the new Income Tax Rules 2026 include education allowance deduction increased to rupees 3,000 per month per child from the existing rupees 100. Hostel allowance deduction increased to rupees 9,000 per month per child from the existing rupees 300. Higher rate threshold limits for PAN quoting requirements in specified financial transactions. Income tax slabs financial year 2026-2027. The new tax regime slabs for financial year 2026-27 are as follows. Up to rupees 4 lakh nil, rupees 4 lakh to rupees 8 lakh 5%, rupees 8 lakh to rupees 12 lakh 10%, rupees 12 lakh to rupees 16 lakh 15%, rupees 16 lakh to rupees 20 lakh 20%, rupees 20 lakh to rupees 24 lakh 25%, above rupees 24 lakh 30%. Taxpayers opting for the new tax regime will be eligible for a tax rebate of up to rupees 60,000 under Section 87A, making income up to rupees 12 lakh effectively tax free. Introduction of tax year. The words financial year and assessment year will be replaced by a new term called the tax year, as per the Income Tax Act 2025, to ensure uniformity and easy understanding. ITR filing due dates changes. Effective from 1st April 2026, the due date to file ITR 3 and ITR 4 for non-audit taxpayers has been extended to 31st August from the end of the relevant tax year. This due date is also applicable for financial year 2025-2026 as assessment year 2026-27. However, the due date for ITR 1 and ITR 2 remains the same, that is 31st July from the end of the relevant tax year. The due date for the tax audit also remains unchanged as 31st October. Tax collected at source changes. Similar to the previous budget, Budget 2026 rationalizes TCS rates aimed at easing compliance, reducing refund delays and confusions. The following TCS rates will be effective from 1st April 2026. Sale of alcoholic liquor for human consumption, rate will be 2%. Sale of tendu leaves, rate will be 2%. Sale of scrap, rate will be 2%. Sale of minerals, being coal or lignite or iron ore, rate will be 2%. 206C1G, remittance under LRS for education and medical treatment, rate will be 2%. 206C1G, remittance under LRS and overseas tour program package, rate will be 2% without any threshold. The TCS rate on sale of alcoholic liquor for human consumption, sale of scrap, and sale of minerals were increased 2% from the existing 1%. TCS rate on sale of tendu leaves and remittance under LRS for education and medical treatment has been reduced 2% from the existing 5%. The TCS on remittance under LRS for overseas tour package has been reduced to a single flat rate of 2% without threshold from the existing dual rate of 5% and 20%. Revised return due date changes. The due date to file a revised return was extended to 12 months from the end of the relevant tax year from the existing 9 months. Therefore, the new due date for filing revised returns is 31st March. Taxpayers are also required to pay an additional fee to file revised return after 31st December. The due date for filing belated returns remains the same. Securities transactions tax STT changes. One of the major changes in budget 2026 was the increase in securities transaction tax rate. The STT rates were increased from the existing rates, resulting in higher transaction costs for F&O traders. The following STT rates will come into effect from April 2026. Sale of option premium rate will be 0.15%. Sale of option intrinsic price rate will be 0.15%. Sale of futures rate will be 0.05%. Buyback taxation. Any amount received as a result of buyback of shares were treated as dividends and taxed at applicable slab rates. With effect from 1st April 2026, amounts received as a result of buyback of shares will be taxed as capital gains. In case of individual promoters buying back shares, the effective tax rate will be 30% and 22% when the promoters are companies. Sovereign gold bonds exemption changes. Capital gains exemptions on redemption of sovereign gold bonds on maturity will only be applicable for investors who bought such bonds during their initial issue and not from secondary markets. Gains from sovereign gold bonds bought from secondary markets will be taxed as capital gains. Deductions at source changes. Buyers buying an immovable property from an NRI can deduct TDS under Section 194 IA by obtaining a PAN-based challan. Earlier, such buyers were supposed to obtain TAN registrations to fulfill TDS requirements. Removing interest deduction on dividends. Earlier, taxpayers were allowed deductions against their dividend income for interest expenditure incurred for such income. However, from April 2026, such interest deductions will no longer be allowed against dividend income and income from units of mutual funds. Include the income tax changes effective from 1st April 2026 represent a major step toward a simpler, more transparent, and modern tax system. With the introductions of the new Income Tax Act 2025 and revised rules, the government aims to reduce complexity, improve compliance, and align taxations with current economic realities. While certain changes may increase the compliance burden or tax liability in specific areas, many reforms such as higher rebates, simplified procedures, and rationalized TDS TCS rates are designed to benefit taxpayers in the long run. It is important for all taxpayers to stay informed and plan their finances accordingly to make the most of these changes and avoid any non-compliance. Disclaimer: the information presented here is based on the proposals and provisions budget 2026 and the income tax rules 2026 as available at the time of preparation. While every effort has been made to ensure accuracy, the content is for general information purposes only and should not be considered as legal or professional tax advice. Tax laws are subject to amendments, notifications, and interpretations by authorities from time to time. Therefore, viewers are advised to consult a qualified tax professional or refer to office official government sources before making any financial or tax related decisions. The presenter shall not be held responsible for any loss or consequences arising from the use of this information. Thank you very much for your patience. Request for like, subscribe, and share.